That's the WPI for the month of June, higher than what our expectation was. How are you reading it?
We anyways had expected a number which is higher than the 1.5%. And I think one, definitely, as you rightly pointed out, it could have been food inflation. The other definitive implication was for the currency, which was relatively weaker, and therefore there should have been a relative pickup on the core side of the picture also, because there are a lot of tradables on the core side of the picture. Plus, overall, the fuel prices were on the higher side, which should have led to a higher level in terms of the fuel inflation. So our reading was about 1.5 plus, which therefore is more or less in line with whatever reading has come out today.
Okay, well, Indranil, it seems as though there is a broad-based pickup which has taken place this time. So like you mentioned, there is that food articles inflation which is picked up to 2.9% on a month-on-month basis, and compare this to around 1% in the previous month on a month-on-month basis. Non-food articles went by as well, so that too has hardened. Minerals, which are up around 6.9% this time round, and compare this to around a 3.7% month-on-month rise that we had seen in the previous month. So there has been a month-on-month scale-up which we've seen, I think, across the board, or for most of the articles that we're talking about. Non-food articles up around 2.1% month-on-month. Overall, what does this tell you in terms of, say, the trend for WPI data, including what is happening with manufacturing?
I think coming out from a sub 1% level to a level which is higher than the 1.5, and given the fact that we are seeing most of the food articles inflation globally and the minerals and the commodity space sort of having bottomed out and relatively on a stable ground, there is definitely a likely pickup in the WPI inflation going forward, also on the basis of the fact of the base effect from the last year, when you remember that the WPI was mostly in the negative territory. So overall, I think we should be looking at further increases in the WPI. It's a relatively faster increase than the CPI that we should be experiencing here. And our end March estimate on the WPI is actually closer to the 4% level.
Okay. Your sense, Indranil, in terms of food prices, because we are working with the news that the APMC strike has been called off today as well. Near term, we're going to see a hardening in food prices and then maybe a softening in the next 2 months odd?
I think, yes, the APMC sort of strike was an issue in terms of raising the food prices, but in my sense of the term, I think it was more localized. The overall broader macro implication comes from the monsoon. The monsoons have been relatively on a good level from an overall sort of perspective for pan-India basis, though we still see is a significant divergence in terms of the distribution of the monsoon. So we would be waiting for further data on the monsoon in terms of the spread, especially in the later part of July and also August, to understand the sowing patterns. Overall, the main items that have been showing increases were fruits, vegetables and pulses, which may not immediately soften out of the good monsoon. So I think the food prices can actually continue to be sticky for some more time.
Okay, well, exactly that. The thing is that, in fact, pulses have continued on their downtrend. We've seen that take place in the CPI data as well. And for the WPI data as well, it's softened quite considerably. 26.61% compares to around 35% that it was in terms of an inflation rate in the previous month. So that deceleration is continuing with regards to pulses. And for vegetables, there's been a spike up as expected, 16.91% in terms of the vegetables inflation which has come in, and this compares to around 12.94% that it was in the previous month. Remember, CPI vegetable inflation was over 14% as well. But Indranil, quick last question then. Does that expect you to possibly, what is your expectations first in August from the RBI, and an overall rate cut strategy going forward? Status quo on the RBI governor, or ceteris paribus on the RBI governor?
August definitely a no, because I think these are the last data that we have before the August policy, and which definitely shows that inflation is on the higher side, or at this point in time showing a rising trend, which definitely doesn't bode well for a rate cut scenario. Going forward, I think it is more reliant on how the CPI moves. And I don't think we are very significantly seeing a softening towards the 5% level. So we might actually end the year closer to a 5.25, but that doesn't really, at this point in time, whatever the RBI target is of a 5% doesn't really get achieved. So my view on overall rate cut scenario is a status quo for a significant period of time. Given that, putting into perspective the global economy, we'll have to understand the incremental data going forward to see if there is any room that opens up for the Reserve Bank of India in the future.
Okay, fair enough, Indranil. We're going to wrap it up on that note. Thanks very much for joining in and taking us through your views on the WPI data for the month of June, which in fact